Hello, everybody. It's Thursday, August 13th, and welcome to the weekly financial thing, peer-to-peer lending, investing, crypto coining, stock marketing, investmenting live stream as we do every week. Have all the latest wonderful peer-to-peer lending information for you this week. It's been kind of a quiet week, but some significant things happened this week. We definitely will be chatting about. And what are we going to be talking about today? Well, it's definitely a little bit of Ratesetter news. We got this big Assetz Capital secondary market release that happened this week. I'm going to be talking about that, the good and the bad, a little bit of Lendinvest news. Our Loanpad update, we got some Blend Network news. And there was an interesting article this week about, it was on the peer-to-peer finance news about 5 reasons to invest in peer-to-peer lending. So we're going to kind of chat about what their reasons were and if I agree with them. And that and some other things to get to. Definitely over and under, trying to keep it to under an hour today. I think we're going to accomplish that because our news is a little bit less this week. So hoping to be under an hour. Hi, everybody. It's nice to see you. Keith is here as always, number 1 in Lincoln. We got Colin in the Peak District, Tony, hot and showery in Somerset, Philip from Thundery and rainy Milton Keynes, Alan from wet Basingstoke, Paul in a very balmy Kenilworth. We seem to have a lot of different temperature and weather situations going on back in the UK. And John, hi, nice to see you, John Day. And Brian, of course, if I remember correctly, in Woburn. I've sort of started to remember exactly where everybody is from. Maybe one day I'll be able to do it off the top of the old head. Wouldn't count on it. But if you can take a minute, please hit that thumbs up for the stream. I appreciate that. Helps me with the YouTube search algorithm to help other people to find the stream and the recommendations. And just a quick disclaimer. Obviously, this information is not to be considered as financial advice, and this information has been prepared without taking your objectives, financial situations, and needs into account. You should consider my information's appropriateness for your circumstances. While investing carries risk, opinions expressed in this stream are opinions based on my own personal experiences. And remember that the FSCS does not cover peer-to-peer lending, and your capital is very much at risk. Please don't invest more than you can afford to lose. Forgot to do that last week, so important disclaimer, especially for people that are joining the stream for the first time, to understand that peer-to-peer lending does have risks. Obviously, we've seen some of those risks become very apparent in the last year. And some good and bad things happening in the peer-to-peer world. So let's get right into it tonight. We were all excited about this big Assetz Capital secondary market launch. And for those who are not familiar, if you're not invested in Assetz Capital has several different account options and products that they offer through their peer-to-peer lending company. And some of those accounts are considered access accounts. Now, when they named them access accounts pre-COVID, they were considered accounts that you would, under theoretically normal economic conditions, that you would be able to access money in those accounts, depending on, there's the quick access account, and then we have a 30-day and a 90-day. Obviously, the 30-day and 90-day have 30 and 90-day notices that you would have to place in order to exit. So with the lack of liquidity that has happened with COVID, Assetz Capital has been working on this secondary market that will allow people inside of those access accounts the ability to be able to exit by placing a discount on their loans. Very much similar to a lot of the other peer-to-peer companies that do offer discounting available. Not as common now, but companies like Funding Secure had a similar discounting system where you could place, I think, up to a 5% discount. And then a couple of other peer-to-peer lending sites offered the same thing. So Assetz Capital did that. Now, Of course, we get the email this week saying it's launched, and we're all very excited. We go to log on, and it was a little bit of a disappointment, if I'm being honest. It's kind of like, you're waiting for that mid-summer Apple announcement that just doesn't quite come to live up to what you're expecting. Like personally, this year, I was waiting for this big iMac announcement this summer from Apple, and of course, they didn't announce anything, but they released a new iMac a few weeks down the road. But some level of disappointment there with the Assetz Capital secondary market. So I eagerly logged on to try to make some sense out of how the secondary market worked. And I got to tell you that I am not the dumbest person in the planet, but I was confused about how the secondary market worked, because I was under the assumption that when you say access account secondary market, that you'd be able to somehow access 30-day and 90-day account notices by discounting those two. And of course, what we saw is that only the quick access account, which requires no notice, was the only access account that Assetz Capital decided that you would be able to offer a discount in. Now, what made it more confusing was when I went into the 30-day account to test it, I had some money in there. And when you go in there, and if you want to read more about this on my website, financialthing.com, there is right on the front page, an Assetz Capital review where I've updated, how to use this secondary market. And you can see kind of a step-by-step walkthrough of that. But when I went into the 30-day access account and I hit withdraw, there was this information that popped up that was quite confusing to me, because it said, hang on, it said something to the effect that you would be able to move a portion of your money into the quick access account to be able to discount it. But what was not apparent was how did you do that? And obviously there was no discount button on a 30-day or 90-day account. So I got on the live chat and I asked them, well, can we only discount through the QAA, the quick access account, which they said yes. And I said, well, I think some of the information is confusing. It's not very well written inside of the 30-day and 90-day accounts when you try to exit. So what we found out anyway, to cut through the confusion, is you cannot access early 90-day or 30-day accounts. You can only do it in the QAA. So if you're in a 30 or 90-day account, you have to apply for your exit. So you have to wait the 30 days or the 90 days. And what Assetz does is try to sell those loans at par, which is a 0% discount. And if you are lucky enough to have your loan sold in the 30 or 90-day account, you can then designate where that money goes. So you can put that money in the QAA to try to discount it out, which really doesn't make any sense if you need access to your money, because if you're able to exit out of 30 and 90 days after the 30 and 90 days, your money then is in cash anyway, so you wouldn't need to exit through the QAA. What it does allow people to do is, let's say you wanted to get interest on your money for the next few weeks or few months, you could put it in the QAA, get access to interest, and then exit later on for a discount. So a couple of other things. You can actually discount your QAA money on the access account up to 99.9%. So essentially you could give your loans away for practically free. Seems like a little bit of a bug in the system, because why would anybody want to put a 99.9% discount on that QAA Assetz Capital money? But you can. 0.5% at 0.5% is the minimum. So anyway, from 0.5 to practically giving your loans away for free. If you hate Assetz Capital that much, you can totally just give your loans away for free and lose all your money. But let's be honest, nobody's doing that. So I hope that somebody doesn't make a mistake and is trying to put in 9.9% and then ends up putting in 99% by accident. And yeah, of course, that's going to be confusing. You can set your preferred discount selling and buyer rates too. If you try to sell something, what happens is when you put in your sale amount, there's a little message that pops up and says the current rate discount is 6.9%, so you can have access at that rate. I don't know how real time that is. I could see a problem if the rates are sort of moving around a lot, that by the time you hit enter to do that market rate, it's probably gone. That's one of the things that I see happening. But you can go ahead and set your preferred discount selling amount. So if you decide, well, I'm willing to take a 2% discount, you can put in your amount that you want to sell and press 2%. Problem with that is that your funds are likely to be set in limbo, because if people are selling for more than 2% discount, your sell order is never going to get executed. But you go on the other end, you can do it on your buying rates too. If you decide you want to pick up some loans for a discount, you're able to do that. And you can set that rate, whatever you decide you'd like to buy it. So if you're willing to buy things at a 5% discount, you can go ahead and do that, put in how much you want to buy. And then as long as you have money in your account to do that, it will go ahead and execute that purchase order if somebody is selling at a 5% discount that matches you. I don't know how the queues work. There's really no information about how people are queued. If there's two people at 5%, I'm presuming the person that sets their order first would be fulfilled first. But again, that's just me presuming. What else? So for example, if we're talking about discount rates, if you're a buyer and somebody is selling at a 5% discount, that means for every 100 pounds of loans, you'd actually be picking them up for 95%. I've heard of rates being discounted up to 10% so far. So that would mean you would be able to buy 90 pounds of loans that would be worth 100. Of course, on the seller side, you're selling 100 pounds of loans for 90 pounds. So you're getting a haircut on that side. So I think it's if you're a avid Assetz Capital fan, it does present some opportunities there on the buyer side to pick up some discounted loans. I know some people are doing that right now, and yeah, I mean, opportunities are there. The best time to be a buyer is when everybody is selling and investing, because they're willing to take a discount to get out. So what do we like what's the thumbs up about this new Assetz Capital secondary market? One thing is creating liquidity. There's already been movement. I've tested it out myself. There's liquidity there. People are buying loans. So that's a good thing, because that was what we complained about with Assetz Capital. Since COVID, the liquidity is pretty much gone and it's very slow to exit. I do like the fact that you can set your own discount rates. You don't have to sit there and watch it. If you want to take a 2% discount on your selling rates, you can put it in as 2%. And the other good thing is it's free. It doesn't cost you as an investor anything to use this service. So that's nice. Unfortunately, there are a few thumbs down which seem to outweigh the thumbs up. What are the thumbs down? Primarily, number one, you cannot exit from the 30-day and the 90-day access accounts, which is a shame. And what I'm hoping is that, Stuart, if you're listening here, please put that feature onto the 30-day and 90-day exit on those access accounts. Give people an opportunity if they want to get out of those early at a discount. Why would you not have that there? And I'm hoping it'll be a future feature that gets coded into Assetz Capital. Don't really know yet, but common sense would say that will be introduced on the 30 and 90-day access. Again, there's no selling queue, so you just have no idea where you sit in this discount position. You don't know how many people are ahead of you or who's selling priced at what. Might be a good idea to know that as an investor if you were trying to exit, and you just don't know where to set that discount at if you're not willing to take the market rate. That could be quite severe at the moment. So it'd be nice to see that. I would like to see a Ratesetter style queue where you could see just who's selling what at what rate. But again, it's early days, so I didn't expect all the bells and whistles. And selling at a slight discount. I remember some people in the stream had asked me last week and a couple of weeks ago, would 2%, 3% get it done on a sale? And I said no, it probably wouldn't. I don't know if that will continue, but I think if you set your rate at 2 or 3%, it's probably just going to be a no sale for you. There's going to be an obvious feeding frenzy at the beginning when a new feature like this is introduced, and people who are really anxious to get out of Assetz Capital, which I'm not. I believe in the company. I think they'll be okay. but you've got those people that are scared and they're going to run for the exits. So that is one of the downsides that selling at a slight discount will probably result in no sale. It's interesting. I was looking at the Trustpilot reviews for Assetz Capital today, and I think the sentiment of some people who invest through Assetz Capital leave bad reviews. They don't really understand how the system works. And if I was a very inexperienced investor and I saw what was going on at Assetz Capital with the liquidity drying up and an access account not being accessible, I'd probably be running for the exits too. So that's why I say I think you're going to see a lot of people trying to exit out of Assetz Capital early who don't really understand what peer-to-peer is necessarily, and maybe they didn't realize what they got themselves into. Just a couple of Trustpilot reviews that I was looking at today. One is a day ago. Lenders are now tied up in knots, can't withdraw from any account. They just Assetz Capital changed the goalpost as and when they wish. Will not reinvest. No respect for investors. We've got one that says 56 phone calls, never had an answer. Always fun to see Assetz Capital staff making false statements. I have 46,000 invested, no interest, very little interest for 18 months. So obviously, you got some people that are naysayers about assets, and then you've got very positive reviews. I don't always put a lot of weight into Trustpilot. Who knows who's writing these reviews, but there's been some really positive ones. This person says, as a lending client of Assetz Capital, virtually all the negative reviews are due to the slow process to get your money out. Be patient. It may take a while. I'm confident that Assetz will come through this. I think that's exactly right. I mean, exiting in peer-to-peer was never, ever guaranteed. Peer-to-peer was not ever supposed to be a really liquid investing vehicle. Some of the early companies that allowed exit they sort of paved a way for people to think that peer-to-peer was a very liquid product that you could just get out of. But I mean, it would be like a mortgage, right? On a property, you just can't exit liquid. You can't get to liquidity on mortgages quickly, and a lot of these assets that peer-to-peer lending secures, like property, you just can't access that liquid very. I'm getting tongue-tied today. You cannot access that liquidity quickly. And a lot of people who are investing in peer-to-peer, especially new people, don't really understand that. So they see things like access and quick access. And, there could be a case to say, or maybe those accounts should be renamed. It's probably not very smart to name an account quick access because when liquidity changes, it's no longer quick access. And is that falsely advertising an account to somebody who is not very knowledgeable? So anyway, that is what's going on with Assetz Capital. Again, I'm pretty happy that they have at least given the quick access account a discounting feature, although I personally will not be using it because I think the asset's going to be fine. I'm not going to take a 6 or 10% haircut on my loans just because I'm panicked about COVID. Other news. So we got Lendinvest receives highest possible credit rating for 6th consecutive year. Lendinvest is on my top 5 places to invest. Again, not a strict peer-to-peer lender by any means, but still very solid. Seems to be doing well. It said that they've received the highest possible rating from the ARC, which is a European credit rating company, and that's been for the 6th year. ARC has said that Lendinvest gets SQ1 rating, which is the first quality and best quality in the rating, with a stable outlook for the financial year ahead. They said that ARC has assessed Lendinvest governance, due diligence, risk mitigation, internal controls, and financial strength and management and underwriting. So they've gone through what they believe are the main things Lendinvest tries to do well, and they give them a big thumbs up. And have put the credit risk on the firm very, very low. So there's a low credit risk. And their cumulative loss rate through Lendinvest loans have dropped from the past year, decreasing from 0.6% to 0.55% for the Lendinvest bridging loans, and falling from 0.11 to 0.09% for its Lendinvest development loans. So on the development loans, they have very, very low bad debt. Not to say that will definitely continue because of what's happening in COVID, but Lendinvest seems to be very well positioned and they're handling the loan book well. And back in June 2019, investors, especially institutional investors, have a lot of faith in Lendinvest because they securitized a 259 million pound loan book float. So what that means is they packaged up 259 million pounds of their loan book as security and were able to get institutional debt on that loan book. So that indicates a really strong appetite from institutional investors that have a lot of trust and faith in Lendinvest. So that was a good thing. Good piece of news, especially in these difficult economic times. So what's going on at Ratesetter? Getting closer to that exit at the moment. I moved out 12 spaces in 24 hours and 37 spaces in 24 hours on the 5-year, 12 spaces on the Access account. So it seems to be pushing forward very, very fast on the 5-year, not so quick on the Access, but getting there. And Ratesetter has released 11 million pounds in July, 1.5 million pounds just this week, and 4.4 million total in August. Again, my exit from Ratesetter has never been about the company itself. It's more about the loans and the return rates that they're paying. Just not willing to accept a max of 2% through any peer-to-peer company. So until Ratesetter's rates normalize, it's just really not interesting to me. I popped on Trustpilot today to see how the reviews were for their company, and they still are at 89% positive. Again, it seems to be people are upset about, this person here writes, "I'm trapped in an Access account." Yeah, I mean, you should have read the terms and conditions because they're never truly guaranteed to be accessible. Utterly appalled with my Ratesetter experience. Just a lot of people that are really confused. They don't really understand how peer-to-peer works. But then a lot of positive reviews about more experienced investors. We got one guy on here. He said, "I fully expect 100% investment loss." And then he says, "Ratesetter is not FCA regulated." Yeah, just again misinformation. This other person said he was in position 13,434 in the withdrawal queue. I've never seen the withdrawal queues at anywhere near 13,000. Completely misinformation again. Other people saying they should be closed down. 50% of your interest will be stolen. Yeah, I mean, this is all COVID stuff. Financial companies make changes when they need to for whatever's going on. No, I agree with all of the changes, but you're invested in a rate system that can change, and there's no guarantees, and there's no exit guarantees. So if you're leaving bad reviews on Trustpilot based on those things, I get it if you're inexperienced, but that's not really the way it works. So what else? What else we have? Loanpad seems to be again just moving along slow and steady. They broke the 2,000 lender marks. They're up to 2,011 lenders now. Loan book has increased a little bit from last week, not much, a couple of 100,000 to 11.1 million. Same, one defaulted loan, 3 overdue. The loan size did increase a little bit to 413 average. I think it was 1,000 average is about 365,000 average last week. Again, really slow and steady. Still less than a 1-day exit time. I've tested it out this week. I made an exit request and had my money in my account within 1 day. Totally pleased. Still getting interest every day. So, yeah, very happy with Loanpad. If you go to my website, you can score yourself some cash back. If you don't have a Loanpad account, go to my cashback page and get yourself some cash back on a company that I think is doing things well. Funding Secure, we had another loan recovery this week. It was a really interesting loan in Coventry, mixed use. What they had was a tenant in there who tried to buy the property. It seems like they put up a deposit and then didn't execute the sale, so they lost the deposit. It ended up in court. It was really messy, but they finally got it sorted out and sold. It was a £224,000 loan, though they achieved a £245,000 sale price, plus an additional £54,000 in forfeited deposits. Now, that looks pretty good on paper, right? But again, when you're in administration, you have to factor in the administration fees. And there was a bit of an ouch when it came to the legal administration fees that were £90,421 on a 200 and close to £300,000 recovery, which resulted in a 17.12% capital loss for investors and no interest paid. Again, one of the main problems with companies that go into administration, you've got this asset that's secured. Your loan is secured by a piece of property, but you got these exorbitant legal fees, and then Funding Secure gets that little 5% cut or whatever their percentage was. I didn't see the numbers, but you recovered almost £300,000 on a £224,000 loan, yet there was a 17.12% capital loss for investors. Now, if you have a substantial amount of money into a loan and you're an investor and you lose 17.12%, in a company that's gone out of business, not the end of the world result, not really the result we'd like to see, because we've seen some okay results through Funding Secure. But, on a plus side, they are recovering. There is recoveries happening, which is more than we could say for some of the other companies that are in administration that haven't really been successful. So that's that. Blend said they had a successful July. Blend Network, they successfully funded 1.45 million in loans, and in June, 1.69 million pounds in loans. Yeah, they seem to be really slow and steady. I mean, they're offering new loans. They seem to have a good contingency in place for COVID, and again, could be one of the bright spots within peer-to-peer lending right now for everybody that's sort of looking, where can I go next? Are there any companies out there that are legitimate and doing things well? Yes, I think they are. I believe Blend, I haven't invested yet, but they seem to be doing things right. And by the way, if you want to they're doing a 1% cashback deal now for new investors. So, I mean, not a huge amount, but a little bit of an incentive for signing up. If you want to get on that deal, you can do that through that link right there. Again, I don't invest yet. I plan on doing it. Let's see, Crowdproperty took about 2 months of time for me to get my money invested through AutoLend. One of the problems with Crowdproperty is they got this demand and supply problem, so they just can't seem to put out enough loans to satisfy the appetite of lenders at the moment, which is very much the opposite of most of the other peer-to-peer companies. So again, is that FOMO, fear of missing out, or is that because Crowdproperty is a well-established company that's doing things right? I think probably some of both of those things, but I do think Crowdproperty seems to be on the right path. Unfortunately, if you have a large amount of money you're trying to invest in Crowdproperty, it's going to take you a pretty long time to get your allocation filled. But a small price to pay if you're investing through a quality company, then Obviously, that demand and supply balance is going to be weighted in investor demand and lower in loan supply because there's only so many good loans out there. Okay, and then finally we have this article on peer-to-peer finance news. It's the top 5 reasons to invest in peer-to-peer. Number 1, diversification. And they say with the base rate, the interest rate at a record low of 0.1% on savings accounts, returns from saving accounts and cash sizes are not beating inflation. In contrast, the stock market has experienced high levels of volatility that does not fill everyday investors with confidence. And in contrast, peer-to-peer lending investing offers regular fixed returns and diversification across other types of assets. Obviously, diversification is very, very important in peer-to-peer lending. I'm not sure about the statement about volatility in the stock market. The stock market is going through a correction, and it's completely back to close, at least in the US, where the levels were pre-COVID. And if you're a long-term investor in the stock market, you'll know that these times of volatility happen. We've seen it over and over again, but at the end of the day, the companies that are in the stock markets are going to be okay in the long run. Companies like Apple and Facebook, Google, Amazon, Tesla, I think are just going to be fine. So I agree with the diversification. Personally, I have full confidence in the stock markets long term. Now, next, second top 5 thing, it's peer-to-peer is quick, easy, and transparent. Stricter rules from the FCA came into effect last December. That means platforms have to be more transparent with their customers about their loan book data and wind down plans. So new customers are able to access this information on their websites prior to investing. I don't know about the transparency. I think there's still some companies that are not particularly transparent. And the question is, what is the FCA going to do to enforce transparency? And what are the levels of transparency that the FCA sets? And do the peer-to-peer companies meet them? I think some are a lot better than others in the transparency side of things. So I would say that would not be one of my top 5 reasons to invest in peer-to-peer, would not be the transparency. It's quick and easy. I don't know if it's particularly easy. There's some companies that are quite complicated. I mean, I think Assetz Capital is one of the more complicated websites to kind of navigate through. But there are some websites that are very easy, like Loanpad. So I somewhat agree with that. Number 3 reason, tax wrappers. You can use peer-to-peer to invest in tax wrappers. I am not a fan of current ISA allocation years. Here's the reason. If you're investing for the current year, you can only have one peer-to-peer ISA wrapper. And I don't want to put my entire IFISA allowance in one peer-to-peer company. I think it's too weighted. I think it's good to do for previous years, where you can split up your previous year's ISA allocations into multiple different peer-to-peer or alternative finance investment companies. So you could essentially open 10 different accounts in one year and put previous year's money into, if you look back at when you open the ISAs, you can split that money up, which I think is fine. But personally, I'm not going to put a £20,000 tax year allowance into one peer-to-peer company. That's incredibly risky. So tax wrappers, yes, for old money, no for new money. That's my stance on it. I'd rather use a prior stocks and shares ISA for new money and wait till it's a year old and then split it up. Liquidity is the number 4 reason. While all investments have suffered from liquidity issues during the pandemic, there are still peer-to-peer platforms with secondary markets where investors can easily buy and sell loans, such as Able Rate and Rebuilding Society. Yeah, but again, what risk are investors taking with companies like Able Rate and Rebuilding Society? Yes, you can make very high interest returns if you pick the right loans, but downside of that is with high returns come high risk. So you can use their secondary markets. Are they effective? I don't know. But a lot of the other peer-to-peer companies are not really offering good liquidity at the moment. So I don't think that would be a reason for me to get into peer-to-peer if I was new at the moment. I consider peer-to-peer investments quite long-term because there is no guarantee of liquidity. I guess if you go into assets and discount your loans at 99.9%, you can pretty much be guaranteed that there is somebody that's going to buy them. The number 5th reason, which I do like, actually totally agree with, is that peer-to-peer lending supports people, businesses, and the environment. Although retail money cannot be used to fund government emergency loan schemes, everyday investors can still support consumers and businesses and small house builders during the crisis and investing in peer-to-peer loans. And yeah, I think peer-to-peer is one of those really bright spots that you say, wow, I'm helping, fund businesses that need access to money. And you could say, yeah, we're doing something good for those businesses. There is ethical lending and unethical. Some of the unethical lending would be where the interest rates are 25%, 40%. Then you've got the ethical lending through, companies like Octopus Choice that are putting cap. They're not lending at 12, 15, 20%. They're very reasonable interest rates. Also, Lendinvest, Loanpad, companies like that. The story says lenders can support sustainable energy and the environment through ethical crowd bonds platform Abundance. And it's community municipal investment with the West Berkshire Council, which helps the local authority to finance green infrastructure projects. So if you're into green and ethical lending, there are some peer-to-peer companies that do that. Totally agree. And we got buy-to-let cars. It writes helps key and essential workers access car leases. So I'm not a big fan of car financing, so I wouldn't say I would consider buy-to-let cars as something I would look at as an ethical investment. I just think financing cars is a silly idea. It's a huge problem right now. And a lot of the first world countries' debt is massively piling up on car financing. People are buying cars they just simply can't afford to buy. So I'm not sure that I really would get involved in that, but I can understand why people do. So those are the 5 reasons that peer-to-peer finance news says is a good reason to invest in peer-to-peer. Yeah, it's cool. Some of it I agree with. Some of it not so much. It was a good article. So let me know what you think. Put your comments in the comments. Put your comments in the comment section. Let me know. I'm going to read through your comments, answer some questions. I think we're going to wrap up under an hour today. This is going to be a victory. Maybe the first time ever for financial thing. We'll see. John, hi. Welcome from Blazing Blackpool. Place I used to go when I was a kid with my dad. Fond memories of Blackpool. The indoor pools, the beach, the donkey rides. Please, again, hit that thumbs up button if you can. Don't forget also to join the Facebook group. We have a rocking good time over there at the Financial Thing Facebook group. We have a gripe. We have a laugh. Join us to invite only. And don't forget the Lendy Action group on Facebook. I'm sure you're already into, but if you're not, you're an investor and you want to keep abreast of what's going on with funding, Secure and Lendy. Those are the 2 links. Go. Hi, John in Blackpool. Hi, Arthur in Belfast. We got Derek in Connecticut still on this side of the pond. Vince from Leatherhead. Sorry, you're a bit late. We've had thunder and lightning. I mean, in Leatherhead. Who'd have thought? Hello, Chica Boy. Nice to see you, sir. Jonathan Harris says, I love the discounted loan. I'm putting my £20,000 allowance in and getting 21,000. Yeah, I mean, if you can get a 10% discount on Assetz loans, there you go. You've made theoretically a 10% gain. Jonathan says you can see the market rate to withdraw by pretending to invest, and it shows you the current rate. That's absolutely true. If you just want to see what the rate is, you can just put 0 in the field of what you want to sell, put a rate in the discount amount, whatever you want, and it'll show you exactly what the current rate right now, 6.1%. Again, I think if you hold on, you're going to see those discount rates drop once the feeding frenzy is over. Maybe wait a week, couple of weeks. Aki Chap from Accrington, welcome. Hi, Paul in Portsmouth. Norman says assets are paying interest. Else, how does your cash account grow? Yeah, I agree. Well, they're paying interest on loans that are in good standing. Some of the loans are, that are not. They are being serviced by the provision fund in some cases. So Aki says, Aki Chap has most of his funds released from Ratesetter on Friday, thinking of having a dabble with a Loanpad shortly. Or may hang on until all of the COVID stuff is out of the way. Couldn't blame you personally. Aki, I think that Loanpad is a place that I have my own money and I think is fun. But I wouldn't blame you for hanging on until COVID was over. Problem is, you may be hanging on for a while because it doesn't look like it's going away anytime soon. Norman says Lendinvest have had very large development loans recently. Yes, they do have some that I've seen in there at over £6 million. But if you trust their due diligence and their underwriting process, I think that you're going to see they have some sensible loans. But I'm not a big fan of those huge development loans. There have definitely gotten some companies into trouble. I prefer to see smaller loans. That's why I like Loanpad, £400,000 loans. None of these big 6 million, 5 million, 4 million pound loan releases. Lendinvest is a pretty big company, so they are going to look for those bigger loans because that's what they do. Paul said, does anyone know anything about a company called Source Capital who are offering Ratesetter customers a 1% discount? I don't, but I'll tell you what, let me have a quick look and see what we can tell. Source Capital, peer-to-peer lending and property backed. Whenever I look at a new company, one of the first things that I go to is I look at their statistics page. And I want to see what they've done, how big their loan book is. Do they have a statistics page? Here we go, loan rates and statistics. So they're offering a 12.8% platform return, 12 loans completed at a 0% default rate. 2 loans are 31 to 60 days behind. 1 loan is 61 to 90 days behind. So the issue with that is you don't have much of a history there with Source Capital. Only 12 loans complete. That means you're going to be an early adopter. So if you're getting a 12.81% return, have a think about what those borrowers are paying. I don't know what the answer to that question is, but if they're paying investors 12.8%, there must be a pretty decent spread there, and borrowers are paying quite a hefty interest rate. And remember that interest rates are somewhat of an indicative barometer to how risky loans can be. So if you're in 15, 16, 17, 18, 19% loans, there is going to be some risk. Okay, so reading more, Source Capital does not take margin between borrower and lender. So what does that mean? Does that mean that the borrowers are paying what you're being paid? That doesn't. Maybe there's a fee. I don't know how they make their money. Let's have like how it works. Let's see what it says. Our experience. You can invest from £250. Regular. I don't know. I'll have to look more into it. I don't know how Source Capital makes their money, but again, if they're paying 12.81%, it's quite a lot. Paul says he is not convinced. Well, they have a little chat feature, so you can have a live chat with them and find out some answers. Hi, Stephen in sunny Preston. You've got funds in Assetz, Ratesetter, Funding Circle, and Lendy. All got a little bumpy since COVID. Thanks for your help. You're very welcome. Yeah, Funding Circle, I think was having bumpy conditions before COVID. So I think Ratesetter, you'll be fine. You'll get, if you want to exit, you will be able to. It's just going to take some time. Yeah, John, I totally understand. You can split up your IFISA into cash ISA or stocks and shares ISA, so you could essentially split your 20 into 3 different ISAs. But what I was saying is you can't take your 20,000 and put it into 3 different peer-to-peer companies for that current year. So you could take a portion, which a lot of people who write to me say, I want to use my entire 20 in peer-to-peer. And I say, well, just be aware that it's very risky because, you don't want to have all your eggs into one basket for that year. Hi, David Dawson. Nice to see you, sir. It's never a problem if you arrive late because you can simply watch the replay, catch up. Mike says, nice to see you, Mike. Source Capital are legitimate, but they have annoyed a lot of people by spamming them with email. There is some concern they might have acquired a mailing list from a defunct platform. They are regulated by the FCA as a representative of Rebuilding Society. Yeah. So again, I can't really comment too much on that, just what I've seen on the website. Only 12 completed loans. So very new to the game. But they, everybody has to start somewhere. Doesn't necessarily mean they're bad, and history doesn't mean everything too, because we've seen some of the older companies go into some real troubles. Yes, Cheeky Boy, thank you for the thumbs up ad. If you could hit the thumbs up if you like the stream, I very much appreciate that. Rob Robson. That's quite a mouthful, Robert Robson. Your thoughts on Cufflink? 2019 accounts now at least 4 months overdue. Bad sign. Not necessarily. I think some companies are extending probably their accounts and putting them through later. Seen it before. I'm still in communication with Cufflink, so I have not been alerted to any possible issues, and nothing I've seen on my end has led to the warning sign. So Mike says, thank you for the Lendy Action Group promo email this week. So yeah, again, Mike is a representative of the Lendy Action Group that I posted the Facebook group link if you want to join up. The legal funding isn't currently open. Okay. So yeah, they've the Lendy Action Group actually put together a legal fund that was funded by investors to have representation legally against what's going on with Lendy's administration process, which is great. Thank you for doing that, Mike and the crew over there. Mary says many commentators are predicting a property crash. Is this likely, and does it make investing in property platforms risky? Well, Mary, we're seeing the UK entering into a recession. Obviously, how long that's going to last is really hard to tell. I think that again, when I say nobody knows nothing, we don't know if a property crash is going to occur, and I would say if a property crash occurs, you're going to see troubles in not only the property side of things, but pretty much every type of business and industry will suffer. Yeah, obviously that's the risk in peer-to-peer and property lending, that the property values fall, you are going to have some risk involved, and that's why you get an interest return. I haven't seen the property, values, at least where I live down in Dorset, really decreasing that much, because I've been keeping an eye on the market down there, and I've not seen really any reductions. I know maybe up in the north things are different, but at least down in the south, everything seems pretty stable. But I always say, if you have severe worries about something like that, then you can sit on the sidelines and see what happens for the next 2 or 3 months. Brian, yes, I'm trying to wrap it up under an hour. Derek says, I've not heard from Lendy for months. Is this the same for all? Yeah, you're going to get administration updates when there are ones to be given. They will be sporadic, but if you go to my Lendy page on my website, I put all the updates up there and the date, so you can kind of follow along. Or you can join the Lendy Action Group, Derek, on Facebook, which I would highly recommend. Aki, you're welcome for the information. Yeah, I think we really haven't seen the economic impacts of COVID yet. I think the next 3 or 4 months, when companies have to start paying back these CBILS loans. And by the way, there's been a lot of news stories about banks who are recalling their CBILS loans early, and they're getting cold feet with these loans, even though they're 80% backed by the government, which really makes the bank's risk very minimal. But yeah, they're trying to recall these loans early, and we're going to see the economic impact of COVID over the next 3 or 4 months with these businesses, and can they sell their loans? But you're also seeing a lot of companies that are doing very well due to COVID. So some of the bigger companies that are to do with teleconferencing, we got Amazon, anybody doing deliveries, a lot of tech companies are doing really well. So again, this is the reason why I'm so adamant about investing in the US stock market, because you've got just so many of these large companies that are really benefiting off of this COVID right now anyways. And you're seeing the stock market's really being pushed forward by those companies. Like, even Apple has not seen demand drop for their products during this economic considered recession. Again, we won't know necessarily if that will continue, but I think property is holding up well, and a lot of other companies are too. So thank you, Chica Boy. That was very kind of you to say that I look younger tonight. Dave says, do you have any more on the test portfolio? No, I don't, but I've got my account opened up and funded. So I've just been keeping an eye on what I want to invest in. So I will do that. Here's my to-do list. I don't know if you can see this, but it's pretty long. The test portfolio is on that to-do list. Yeah, I did a pretty big rework of the Assetz Capital review this week, and took a few days off. So I've got those 2 videos too that I'll be releasing hopefully tomorrow, the Vanguard walkthrough, and then the trading on the Coinbase for the cryptocurrency. So yeah. So yeah, Mike's commenting in the chat about Lendy updates. He tends to have the latest information about what's going on. Yeah, that is true, Mike. I have the same thing on the financial thing Facebook group. People don't answer the 3 questions that I have. One of them is, "Do you agree to be polite and not to cause trouble?" And some people say, "Unanswered." Anyway, so 55 minutes. I don't think you have any more questions. I'm gonna go grab some, Tetley and, get on with my day here in Florida. Thank you all for joining me. I very much appreciate it every week. I love being here with you. You're the reason why I continue to come and do this. Obviously, this is not something I get paid to do. So thanks for joining. I hope to see you next week. And enjoy the weather. Enjoy the weather. Get some sun on the pasty white English skin that we have. Me too. Look very white. And have a good evening. And I'll see you next week. Take care, everybody.